It's Wednesday the 8th of May. Dollar index chart. The only chart that really makes any sense at all is the hourly chart. So we've got a trend line going back to middle of March, and we are holding below it now, as you can see in this little pattern here, and we're holding below the 200-day moving average as well. The 500-day moving average is offering some support. So really, pressure is to the downside unless we get back above this rising trend line, which is going to be a struggle. A break below yesterday's low, which was down at 97.38, is going to obviously be negative. Yeah, this chart does look quite negative for the dollar actually. The Australia Central Bank did not cut rates yesterday, so we had a little spike up. We didn't quite manage to get to 70.55, and then we've pulled back because I think the market view is eventually we will get the rate cut that we're looking for and an easing bias, but they're not going to do it before the election. So I still think that the outlook is quite negative for the Australian dollar versus the US dollar. If we held below 70.1822 today, then obviously that is negative. We seem to be doing that as I record this. And then back below 7,070.00 will keep pressure to the downside for the Aussie today. These are all hourly charts. New Zealand dollar clearly in a downtrend on the hourly chart for the last month. In fact, it's been in a downtrend for longer than that. So bears remain in control. What they now need is a break below the previous low, which is at sort of 65.80, 65.75, and that should start a new leg lower in the bear trend. Just have a quick look at the daily chart in case I'm missing anything. No, not really. You can see there's nothing. I don't have any real support areas for the New Zealand dollar. I'm surprised it's not fallen faster. That's actually the monthly chart. Switch to the weekly chart. Yeah, there's not an awful lot on the downside once we break that low, and I think we will break that low at 65.78. Yen gaining from the uncertainty over the trade issue with China, and it's a safe haven. So we've seen the yen strengthen against the US dollar yesterday. 500-day moving average acting as resistance, and now we're down below the 100-day moving average, which, as I said yesterday, would increase pressure to the downside, and indeed it has. And I think this can continue lower. We've got this little spike low down at 110.01, so below 110.00 should be more negative, and then we can look at 109.90 and 109.70, the March low. Euro yen, we talked about this trend line being the main focus, and as long as we held below here, the market would continue lower. Certainly did, plunged yesterday, and again I see further moves to the downside with this. I don't have any support levels that I would be concerned about the bulls stepping in. So yeah, pressure remains to the downside. I'm not concerned too much either about the oversold situation. Euro's going nowhere. Holding the midpoint of the Bollinger Band quite nicely though. That's acting as resistance at around 12.18. We'd need to get through the trend line at 12.30 for a break higher, targeting sort of 12.55.60, and maybe this trend line up here at 13.00 area. We've got support on the downside from the lower Bollinger Band at 111.18 and the lower trend line at 111, just above 111.00. So a break below 111.00 should be negative. In between here, there's just nothing, and you can see we're just dancing around in the middle with no direction whatsoever. Perhaps it's a little clearer on the hourly chart for the euro US dollar. We're getting tangled up here around the Fibonacci levels. There we go, 111.90. We're getting tangled up around there. So yeah, we've got good resistance up here at 112.25, 112.30, probably worth a short, seeing as we are in a bear trend. Stop above 112.45 or 112.50 to be safe. But if we do break above there and settle, then obviously that's going to be bullish in the short term. US dollar versus the Canadian dollar, up for a day or two, down for a day or two, just going nowhere. So very difficult to trade unless you're a scalper and you like that kind of thing. The best advice I can give you, I can't show you on here, this is the hourly chart doing nothing, but I would stick Bollinger Bands on your charts. I'm sure they probably would work on the hourly chart, but I've got them on the 4-hour chart, and they're working quite well for the Canadian dollar, giving support and resistance areas for scalpers. That's the best advice I can give you for this pair. Pound versus the yen has sunk back to the 100-day moving average support, and there's a little trend line just below there. So the 100-day moving average I think is at 143.75, and then you've got this little trend line down here at 143.47. So this will be the most important support of the day. Not sure if this trend line is particularly relevant anymore, so I'm going to take it off. 200-day moving average is here at around 144.50, so we should look a bit more positive above there, but I don't think this is yeah, it is actually having an effect on the price, so just watch that. And above 144.50 looks a little bit more positive, but this is mostly in a sideways trend anyway, so it's not very exciting. Gold is not benefiting from the shake-up in the financial markets in the same way, for example, as the yen is as a safe haven, and clearly this trend line now at sort of 1287 area is a factor. We haven't managed to get through here at all this week. It's really acted as resistance, just as it did last week. So 1287, 1288, this trend line and 55-day moving average is obviously declining, so we've now got it down at 1292, 1293, which I think is probably a stronger resistance level. Bulls will need a break above the 100-day moving average, which is around 1294, 1295 for a buy signal. There's obvious resistance in silver just below $15. That's working very well. We've had that level on the report for quite a few days. We'll need a break above $15 for any sort of short-term buy signal, but really I don't see this running up too far. Even if we do get that move, 15.11, 15.12 could well hold it. I've had a negative bias for oil for quite a while, and I think I did say yesterday that if we hold below 62.55 this would be negative. So oil went down yesterday and it's recovered a little bit to this resistance at 61.60. The levels do seem to be working. Now if we start pushing above $62, this is going to look a little bit more positive. As you can see, we've got a trend line 100-hour moving average, so we'll probably push up again to 62.55, 62.50, 62.60, by which time the 200-day moving average will have come down closer to that level, maybe even touched it by the time we get there. So that will then be the next important level, and if we push up then through sort of 62.70, that will look more positive for oil. You can probably tell I'm starting to wonder if this is going to recover, and the main reason is that we've really held this area down here. We've got 55-day moving average, the red 200-day moving average. We've got confluence of fib support as well around 60.90, 60.70. Now whilst this didn't hold, what was that? That would have been on Tuesday, no, or Monday. When we dipped down to $60, we bounced back quite quickly, and yesterday we held that level. So this is what I'm starting to wonder if oil can now recover. You can see we're more in oversold territory. We're touching that oversold territory line, anyway, the 20% line. So I'm starting to wonder if oil will recover. Right, E-mini S&P, I called the top when I saw this bearish engulfing candle. I wrote an article to explain in detail why I thought that the stock markets would turn lower. Admittedly, I was caught out by such a strong rebound on the non-farm payroll on Friday, but I stuck to it. I stuck to my guns, and I suggested that the market would continue lower. We were selling at the top of this range, around the 29.35 area. That worked well. We got up there again yesterday, actually. Well, we got to 29.30, sorry. And we broke the previous low. So as you can see, we are developing that bear trend that I talked about, that we were in, the very, very short-term bear trend, fair enough. But we are developing it. Now, it's much clearer on the hourly chart. You can see I've got some trend lines here that demonstrate how we're accelerating to the downside. I said that we might well accelerate to the downside, and that does seem to be happening. So we're getting lower highs, lower lows, which obviously is the definition of a bear trend. And I think that this will continue. So keep selling into rallies. Today we've got good resistance. This was obviously a good support level, or I thought it was, and it certainly worked the first time. Just above 29.00, 29.04, 29.06, call it. We would want to hold below 29.10 to remain in that bear trend channel. So above 29.10, well, above 29.15 really. We've got some moving averages up there. Just be aware, you do get big spike ups in downtrends in stock markets. So it's possible we'd spike up to 29.15 and then dump. I wouldn't get out of my shorts unless we're above 29.15. And even if we do rally up, then we've got sort of the high 29.20 area, 29.25 to 29.30, acting as resistance again. I am sticking with the bears. I think we can go lower. Dow Jones also lower, of course, holding the midpoint, the mid-Bollinger Band, the midpoint of the Bollinger Bands there yesterday, and then plunging below what was good support around 26,000. Now we dumped and then recovered, but we seem to be caught up there around the 26,000 level. So this still looks negative as long as we hold below 26,000, and we are as I speak. So let's see if we retest the low at 25,750 from yesterday, and a break below there obviously starts the next push down in the short-term bear trend. You can see that we've got very good support at around 25,500, 25,450. We've got the 200-day moving average at, well, it's climbing up towards the 25,450 area. So that is our big support level. If you're short, that would be a nice place to take some profit before the weekend, and we'll see what happens there. If we close Friday below there, that's going to be a sell signal. In the DAX, I had the 12,290, 12,270 area as key support. That was going to be key to direction. That was this little area here with the trend line and the 500-day moving average. So I said below 12,230 should be very negative. Well, it certainly was. If you managed to sell on the break below 12,230, you had a great day yesterday. I had support down at 11,950, 940. I'm just reading my report as I look at this chart. We didn't get down that low. We got below 12,100. I said that a break below 12,230 would target 12,180, 12,130, and below 12,100 targets 12,60, 12,50. So we got to that 12,60, 12,50 and held it almost perfectly, actually. We bottomed just 12 ticks below it. But this still looks pretty negative. I don't think a bounce is going to take us too far. We've obviously got resistance around 12,170, 12,190. That was one of our targets on the downside. So I think we're going to head lower, and I wouldn't be surprised to see us test that support at 11,950, 11,940 before the weekend.